Hi, this is Bob Nachman with Nachman Norwood Parrott Wealth Management, here today with our current outlook. On March 23rd, during the pandemic-induced decline, the team at NNP released a video update. In that video, we stated that we felt most of the decline was behind us and that we were due for a rebound at some point. Although this video was certainly prescient, we would have never guessed the market would rally for 9 months to the tune of a 70% plus gain. In fact, probably no one would have. As we consider 2021, and for that matter, the next several years, it's our opinion that we are facing one of the more challenging times in history for investors. The menu of options looks like this: cash at a basically zero yield, bonds with minimal yields and at some point a high degree of interest rate risk, or stocks and real estate anywhere from fully priced to overvalued. In other words, of the major asset classes, there are no bargains. Layer inflation on top of this, and the result is negative real returns for cash and possibly bonds as well. While we believe that some degree of cash and bonds is necessary for defense, negative yields are not a viable long-term solution. Although equities are arguably on the pricey side, the foundation for gains remains in place. We have said for years that the best recipe for equities is low inflation, low taxes, and low interest rates. Currently, these components remain in place. In fact, we probably never had a time in our history when the Federal Reserve has essentially promised rates will not be raised for several years, offering support for current valuations. At the end of the day, we default back to the textbook and the concept of risk premium. Currently, the risk-free rate of return is basically zero. Even if equities, as well as other risk assets, produced far below historical returns, it's likely they can exceed the risk-free rate by 3% or more and therefore do their job of outpacing inflation. Obviously, as always, we will have pullbacks along the way, and we're certainly due for one. Our experience in financial planning builds the case that high net worth investors need to grow their assets in order to keep up with, or preferably exceed, the rate of inflation. Therefore, at a time like this, one must maintain savings and investment discipline and find the proper balance going forward. Maybe returns will be subdued versus history, but the goal has not changed. Yes, there are a litany of worldwide issues we can worry about. COVID, a new administration, the national debt, the list goes on and on. However, at the end of the day, the fundamentals of investing and financial planning have withstood the test of time. As always, our team is here and ready to help you navigate these markets as you strive towards reaching your personal goals.